Welcome to Trading Lounge and the Asian report for the 30th of September. We're looking at the XJO here, the ASX200 on a daily chart. The reason I'm showing this for is because obviously the Australian market is pulled between finance and resources. So when we look at finance here, we can see that this is the finance here. Well, in fact, this is the banking sector, the XXJ. We can see that the banking sector is actually above the previous high here. And we'd also on the XJO assumed that this was a 5-wave move down through here. It still can be with a B wave up here as an A wave and a B wave taking out the top here. And this would be an A and a B and a C wave up to this high here. But this high gets taken out here, then we know that we're in a bullish market at that point, and we'll still see a series of wave 4s and 5s taking us higher here. So it's looking very bullish for the banking sector. When we look at the XMJ, the resource here, we also see this here in I see it in 5 waves down here, 1, 2, 3, 4, 5 here with another little 5 here. So to me that's pretty clear here, and this market has pulled back into its place where we wanted it to pull back into, the 50-60% retracement level area through here. So in this instance here, I was just waiting for the first 5 waves to the downside to unfold. And once we see a corrective wave move back up here, then we can look for short positions in the stocks that are in this sector constituents. That's the word I was looking for. The banking sector is making new highs here. The resource sector is struggling to the upside. I think that this is a corrective move to the downside, impulse wave to the downside with an A and a B and a C back up through to here. It could be, if I've got this wrong here, up for 1 and back for 2, up for 1 and back for 2, and then continuing to move higher. So I need to be a little bit careful. Normally would see these markets move in the opposite direction of each other. So it's unfolding, and it will reveal itself, and we'll be on that side of it at the right time. So when we're looking at the XJO here, the ASX200 here, we need to be mindful that the banking sector can move higher, and the resources can move lower, leaving this in a sort of rock and a hard place. So we just obviously the sectors that have the most volume coming into them will take control of this particular market here. So we need to be a little bit mindful that this can be a corrective wave back, and we're going to look at that, and that means it will take us higher. But we also need to look at it too. If it's going to be controlled by the resources, then it could be down for 1 here and back for 2, and then moving on down here further. So we need to look at both counts here. So in the first instance here, if we it rose much higher than the 61.8% of the previous wave here, so it was pretty much controlled by the banking sector, but not totally, because it didn't make new highs here. So we could look at it like the material sector as an A and a B and a C up through to here, and then coming further down through here. So we'll need to be mindful of what occurs in this space here. If we look at it in the banking sector, we can look at this top here in wave 3, and we would look at this in wave 4 here. If we're going to look at it in wave 4 here, then the 38.2% retracement level is actually down at this level here, so the 620 area here. So it's not that it has to come all this way down here. It's come down enough here, but it's still, it still can come down and retest this level here. This level here is important, the 6650. Obviously you can see that it's a really nice support level here as well. So really it leaves us to understand what's going on in this particular area here. So we need to look at it as bearish, and we also need to look at it as bullish, and we need to know at what point makes it bullish, and when can we move in on the bullish side safely. and the same to the downside as well. So that's what we'll be looking at today. So going into the hourly chart here, it's possible to look at this here as an A wave down to here, an A and a B and a C wave here for the B wave, then 1 and 2 here, and 3 here, an A and a B and a C for the fourth wave, and down for the fifth wave. So we're having an A and a B and a C wave here for wave 4. So that can be completed. It does appear that this little move up through here can be counted as 5 waves. The move back down through here has pulled below the 61.8% in this box here, but it still can be counted in 3 waves. So when I look at this here on the tick chart, 100 ticks, I can see from the top here we can look at 1 and 2 and 3 here. Wave 4 was rather high here, but I'll just stay with that for the time being, and then down for 5 here, because this is in a clear 3-wave pattern here, so I can't put this here and have this as an A wave, a B wave and a C wave here. It wouldn't work. So I need to look at this as the A wave here, the B wave here, and then I can see that this is in 5 waves in this particular structure here. So it does suit quite nicely as a 3-wave move down. Maybe it could turn into 5 waves, you know, moving down from here in terms of wave 1 and 2 here, and wave 3 here, and wave 4 here, and then coming down for wave 5. But that would leave this wave 4 here overlapping wave 1 here. So it's probably not the case. It could be that this is down for 1 here and back for 2 here, then down for 1 and coming back for 2 here. So then that would be, in this case, taking this high here would leave us about 767.10. So that here, that's not quite on the level there. So that 10. So from this high to this low here, the 61.8% is quite close to 67.10 at this point. Okay, so that 67.10 there, that becomes quite an important little sort of stopping point in here for this market. It also appears that this looks like it's in 5 waves here in terms of 1 and 2 and 3 and 4 and 5 here. If that's the case, then somewhere in this space here we should see an A and a B and a C come back into that space. So what we could do on the long side, for instance, let's say this is the low here, the market's coming up here in a little 5-wave structure here. That means that we should see some sort of little ABC here. So this could go a little bit higher here, may jump up here on the open at 8 o'clock when they reset, and then, you know, pull back and retest that. But what I am saying here is that whatever it does, that may be the high. That may be the high. It doesn't matter where the high is, but wherever that high is here, then that becomes the catalyst for any long trades at that point. So if that pops back at that point, then that's fine. If for some reason the market jumps up here and then finds the 67.10 as support, then you also look for the first high above the level and take the long trade at this particular point here. But I have to say, on the upside, all of this would be, any long trade within this space here would be at risk. In fact, any trade below the 67.20, 22 area here, 23 area here, would be at risk of further downside here. It's only when the 67.23 becomes this tested support, or this B wave gets taken out here, that will be going higher and will be safe from that point. So in a nutshell, we can say that this 72 number in here would be the important level here to have as support for a safe trade to the long side here. If you were going to go long anywhere in this space here, then you would also need to get the 61.8% retracement level here as well. So where it currently stands here, any stop that you put in would need to be, well, because of market makers, if you're using a CFD platform, then you would want to keep it at least a point below this 6690 here as well. Okay, so keep it out of reach of that. So that would be the long side here with all of that. So that's the bullish move for all of this. And the short side of this, or if this was a wave, got wave 3 here, and you know the wave 4 that we're talking about, whoops a daisy, the wave 4 that we were talking about before can also pull further down here. So this could be possibly counted as wave 1 here, an A and a B and a C for wave 2, wave 3, wave 4 and wave 5 here, just another way to count it, and having this up here is the B wave, but this does count okay as a C wave up here. And this doesn't count as 5 waves down here just yet, but like I said, it possibly could evolve into something like that. So it's possible that we could get another 5 waves over here to make wave C of 4 here. So in that case, this low here would become the catalyst for being short at this stage. So the 67.20 there, 67.23 as we talked about, would be okay for this market to move up with, and over here to the downside. But the bias is to the upside, even though that the S&P 500 closed lower at 0.5%. So yeah. Alrighty, moving on to Hong Kong. With Hong Kong here, as I mentioned last time, I hadn't actually counted this down properly here, but I just felt there was another move down. There may even be another little move here to finish this off as 1 and 2 and 3 and 4 and 5 here. But what we are looking for here is this is an impulse wave, and we're looking for the low of that. Once that's in play, we'll see a rally. We're not that interested in trading this rally up here. We can do, and I'll point that out, but I think it's more because this move here is in 3 waves here, then we'll be seeing more downside coming into play here. So what we're looking for is a little rally to come into play here, and then we'll look for short trade setups. And that way would be trading in line with this trend, would also be trading in line with this trend here, and of course the much bigger trend in this as well. So, and what that means, if we can just go to the, have a look at the daily. Because if this is right, then this would be wave 1 here, wave 2 here, wave 1 here, wave 2 here, then down for 1 here, and coming back for wave 2 here, and then moving down further from that point. So we'll be moving into a third of a third of a third here. So it will be a powerful move to the downside here for all of this. China's going into their 70-year rule now, so they'll be having celebrations this week, I think, or something like that. I'm not totally up with the news, but it's the longest period of control, which outdoes Russia, and obviously there's going to be protests in Hong Kong for that, and China's not going to want any protests there, so there'll probably be blood on the street, unfortunately. Yeah. So anyway, that's that. So looking at India. So with India here, we understood that this move up here was an impulsive wave. So I was looking at it as wave 1 and looking for it to pull back as wave 2. So we're going to be looking at that. The other point here too is that, just in case I've got the count wrong, maybe it's in play that we've got all this as wave A down here, then an A wave here, a B wave over here, and a C wave in 5 waves over here. So what we're doing is waiting for these 5 waves to pull down an ABC pattern in this space here, a bit like this here. So we'll look at this in a bit more detail, but from this low here to this high here, we're looking at, well, quite a way down there, isn't it, really? So down into this space, that's where it can come to here. So we need to be mindful of that. It's probably not the case, because this level here, the medium level, 11,500, halfway between 10,000 and 13,000, the market really won't want to let go of it. You know, it can push down, but and it'll be supported by this. If it's going to come down, it's probably likely to come down to 11,300 and bounce back from that point there. But we are looking, when you look at wave 1 and 2 here, wave 2 is normally a 5-3-5 structure, an ABC. So we look for 5 waves in the first wave, then 3 waves for wave B, and then 5 in the C. But we're not getting 5 waves in wave A here in this case. It looks like we've only got an A and a B and a C wave in here. I mean, one good thing about this is that it sort of stops it from being an impulse wave to the downside here. So it does tell me, because we've got 3 waves in this first structure here, we do have a correction here. But I scratch my head, because normally when we look at wave 2, this wave A here would be in 5 waves. So, I mean, maybe I've got it down as, should have it down as wave 1 here, wave 2 here, wave 3 here, wave 4 here, and wave 5 here, and have this here as wave A over here and wave B over here, and then, you know, wave C over here, so to speak. So it's something that we'll have to look at a little bit. But either way, this little move down through here, we need to track that as well. Obviously, you may be short from these lows coming into play here, and that's okay. You're on the right side at the right time, and we've had this here, just as an example, we've had this up here. We can bring it down to the second low, the third low. We can bring it down into these little areas here now. So that's where that will be, just in case we got it wrong. If the market takes off, we need to be, you know, we need to be long above these highs here, because that would finish off the market being correcting at this stage. But we need to basically track this wave B here down to wave C here. So let's just go into the tick chart here. This is 100 ticks. Let's get a little bit more in there. Maybe I'll just go a week. Right. So we counted 5 waves up here. As I mentioned, this here gave us a nice 3 waves here. I can count this as an A and a B and a C counts best here, because if this is wave 4 here, it's moved up 61.8% and overlapped wave A here. So yeah, I scratched my head a little bit about that. So maybe we don't pull all the way back down there. But if I look at this here, I can see this is an A wave, a B wave, and a C wave here. It might make this an A wave here, a B wave here, and a C wave here as well. But I have to say that this doesn't count very well as a C wave here. It counts better as an A and a B and a C wave here. This counts here, could count as wave 1 here, an A and a B and a C for wave 2, down for 3, 4, and 5. It's more like this 5. So this is not counting very well as wave 1 here as well. So there's a few problems with all of this. I can count here as 1 and 2 and 3, and also here as 4 and 5 here for wave 1, corrective wave back for wave 2 here. So we'll just track this one here. This is this is the one that sort of fits best here. So from wave 2 here, we'll go down to wave 3 here. We'll be looking for 5 waves. So we've got wave 1 and 2 here, then 1 and 2 and 3 and 4 and 5 here for 3, back for 4, which will come back to wave 4, 1 lesser degree. Can't draw on this side of the tick chart, but then wave 5 moving down here for wave 3. Wave 4 can come back somewhere near wave 4 here again. If this one doesn't go right up level to the top here in that case, then whatever that is down here, then this one here can be brought down onto that trend line as it diminishes here. And then we'll look at wave 5 here for wave 3, which obviously that can be moved up a little bit at that point. And we'll see this wave 4 here, and then we'll see wave, I think, even though this is the 50-60% retracement level, and certainly can move all the way down here, but it's more likely to sort of be around the 11.3 here. And just know 3 is a really strong number at the top of group 1, but we'll see. But this is what we originally, you know, when this made the top here, we were looking for an A wave, a B wave, and a C wave, and it hasn't been a perfect world. But at the same time, we have been sort of, you know, we're moving in the right general direction. It's just not totally perfect. That's all, and we need to accommodate things and make sort of assumptions and so on and so on with all of this. So, I mean, any breach of that line there to the upside, you know, as if it does it just in here, I mean, we can also go long above this technically. I mentioned this one here or this one. Technically we can do it above this high here as well. I mean, really, support back on the 11,500 as a classic trading levels pattern with the first high above the level and all the rest of it, we can go long from. But we're not there yet. We're on the short side, and this can also be the stop here as well for the short side of the market here. I'm just looking to see. I mean, even if we put, let's just shoot the breeze here a little bit and put wave B on top of this one here, which is possible, but we just don't have 5 waves up here. I'm just running my mind over things. I mean, you kind of always got to look for the best fit. And not to say that the best fit is right, but what it can do is that it can give you price points where you can have triggers. So, like, I know that if we count this down as even if this wave 1 was over here and wave 2 here, any breach above this would be a long trade. Really, any breach above this would be a long trade, and take you out of your short. So if you're short here, I mean, this also here too is that, you know, this market came down here, so we'd never chase a breakout coming down like that. We wait for the retest, and if the retest fails and then moves down, then we go short below here, right? That will keep you safe. And the same here as well. So that came down through here and did all of this here. So you could bring these up into these lows here to get triggered here. I mean, it worked out nicely. It's the same within these little spaces as well. So it's just practical application of knowing things. So anyway, that's how I do it. So it's not perfect, but it's helpful in a way because I use Elliott, and then using the trading levels and the patterns that occur across the trading levels, the classic trading levels pattern, the variation on the classic trading levels pattern, and the overshoot pattern, then, you know, that makes it a little bit easier. And as I mentioned before, this is really an overshoot pattern here. So as I mentioned before, the distance here, as a rule of thumb, from this point here normally swings the same below here. That was kind of another reason I was looking at the 11,300, so it might get all squashed up into that. So the overshoot pattern here is, I'll just go over it again here. So this is it here. So it doesn't really stop at the level here. I mean, it did stop at the level, do a little dance here, but it didn't really, you know, it didn't rock here. It didn't really, you know, move back down from that point. You stabilized there and moved higher. So to me, that hasn't stopped at the level. It has, but it hasn't, you know, hasn't left the level in any way. So moving up through here, and then coming down for the A, the B, and the C, and that's what we're looking for at the moment. So at the moment, we're just in here. So we're looking for a little bit further to go down through here. Yeah, we could draw a line through here and go along here. We could count 5 waves down here and then go along from the bottom here. There's a lot of things, you know, it doesn't really matter what you do, as long as you know what you're doing it. I'm just pointing this out for the safe trade here. So once it does this here, gets back on the level, and this level is quite important here because when the market goes above this and then drops back down below it, this level becomes like the balance line in the market, and that would normally be around a particular whole number at least, well, in this case here we're working with the level, so the 11,500 here makes it easier for us. We know what it is, and then we can look above that, all the little levels above it and so on. So alrighty, anyway, that's that. Cheers.
Report unless it's done.
Really?
They're sorting up some folks.